Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, June 18th, the year 2018. Let's talk trading. Why you are not getting better at trading, part 16. As one of the viewers pointed out, when I started this, I said it was going to be maybe a three-part series. I had no idea it was going to grow to this. So today, what shall we talk about? Let's talk about something that has to do with being realistic, and that is being overly optimistic that you're going to take $1,000 and turn it into $1 million. I mean, there's people out there that, that's what they set out to do. They have these positive assumptions, but they lead to disastrous results. Now, that's not being negative. It's trying to be realistic here. Because if you don't realize that this isn't a get rich quick scheme, that's not what trading is about. There's work involved, there's study, there's time, all these things, but it's just so easy to get caught up in somebody's sales pitch. Like I saw one last night, the X scalper, the M1, M5. This thing is going to basically, it's better than all the other indicators out there. I'm curious if anybody else got that email, because it just makes me chuckle, especially since I'm such an advocate for, just using simple horizontal lines, that you really, really, really do not need much more than that to be profitable. So what I'm saying is that let's have realistic optimism, or let's just have the attitude that we're going to work at this, and hopefully the market will smile upon us and we'll be able to bring home some pips. And one way we can do that is we can stay in the game for the long haul is we apply money and risk management. It's just that simple. We have our position size such that it's not too big for our account size, and that we can sustain a loss or two or three in a row and it not take us out of the game. That's important. So let's take a look here. Oh, let's see. I've got this on Canadian, and usually we start out looking at the dollar yen. So let me put this thing back here. And as you can see, we're still in the upper wick zone for the month. Green month. And for the week, you can see we went into the upper wick zone here, and then we came out. We started in the upper wick zone and we took that short. And I took it short, and I picked up about 27 pips, I believe, yesterday, playing that short out of that gap. As you can see here, we've got the spreads all settled down. And you can see here there's only one gap that hasn't filled. I'm kicking myself because I pointed out the euro, but I didn't take the euro because I'm just pretty much focused on the yen. But that was one that filled. And if you remember, it was down here when I highlighted it, and I did not take it. I missed out on that trade. Hope somebody got it. In fact, somebody said they got a wick zone trade yesterday and took pips. So this is the remainder. So once again, simple gap fill on the Sunday/Monday open, depending on where you are in the world. is profitable. You know, no magic X scalper needed. These names crack me up. But I guess somebody'd make fun of the rat zone, but there's a reason for that name. And now we look at the daily. Once again, out of the wick zone, into the wick zone, out, and then back in here. So we're looking for maybe a possible another exit to the downside. You see this nice big long candle here and here. They're uncovered. They're naked. So let's see if they get covered. Because you can see here, this candle body right here was uncovered until, I guess, Friday. Then it covered it. So right there, that candle body was naked. Now it's covered. But actually, this one right here, this is a small one. It's the big ones that are naked that seem to cover. And the ranges, only a couple over 100. Here's pound CAD sitting right at 100. And we have the buy zone here. And you can see here, there was a short trigger. And if you went short, you were never threatened. Your stop wasn't threatened. There's your future pivot point. So right there. And then right here for pro traders, but the novices should not have taken that short. But a pro trader could have played that once again for a short. Rat zone, there's not much. We got 43 pip range. Not much of a distance between zones. So I really wouldn't be playing rat trades on this today. Okay, we can probably put this back to H4. We've already covered that pivot right there. You see we're looking at, here's the weekly pivot. Might play to this right here. Have to break through previous low first. Previous daily session low. Pivot got covered. We saw that yesterday. Price action. One ball red at the line. Two ball green at the line. There's a one ball. So we look for a green at the line. On the H1. Simple, simple, simple price action. Once again, the 5 lines. Previous daily session high, mid, open, close, and low. At the line, we trade. Same thing here, wick zones. In and out of the wick zone, but more time in because previous daily session was pretty much a doji. On the holo, time frame, let's put it to an hour. You can see there was the low, lowest open, highest open. So it's been ranging in between, not much action on the holo. Actually, usually 15. You can see it better there. Tick chart, just turned on the computer a little while ago. Highest bid, lowest ask, and they flip-flop depending. You can see here we're selling because the ask is below the highest bid and the bid is below the lowest ask. Selling. And here we go on the inventory reduction bars. There was a nice short there at the 43. Another short at the 41. And the last, or the closest green trigger is here at 110.51. So unless something else changes, depending on what this bar does, we may or may not see a green trigger right here. My 1 minute price action trading screen with the return bar here. Let's see if price returns here, takes it out. And as you can see, you don't see any, hardly, it's hard to see if there's any other return bars that need to be filled. I don't see any. And what I'm calling a return bar is, let me, working on this, still working on this indicator and upgrading the spread dots. Basically, if the body is more than 2 pips, and that will become a return bar. So, and these lines are set every 2 pips. It just seems if a bar is 2 pips, or a body is 2 pips or higher, not the whole bar, just the body, price seems to like the return. There's something I was looking at, just kept seeing it, and so I had to write an indicator. And actually, I have to write a frequency distribution, a couple of them, to see what the size of the bodies are, and then see how long it takes it to return. Maybe narrow those, get those frequency distributions, might be able to come up with another system here. Right now, I'm just using it without the benefit of statistics. I test things, then I write the statistics or write the indicators, because if it doesn't come out in testing, there's no point. But we'll see if price comes back to this, how long it takes. Since I turned it on right here, we're getting a break to the upside. So what I'm doing is, you see, by knowing if there's buying or selling, it helps me time the entries. And knowing if this is a return bar, it's like, well, wait a minute. Even though you have a trigger, if this is a return bar, chances are if you were to take that trigger, you're going to experience drawdown. So it's like you can wait and see, let that bar cover, and then come in once you get the buying, and then you get price going the way you want it to. Just something I've observed. Because I don't know if you were had anything experience anything like I experienced. There's just so many times, as soon as you enter the trade, it goes against you. You just wonder why does that happen? Well, I think these return bars might have something to do with it. So for example, we had an open at 41 and a close at 43. You see that's 2 pips. And you see how it's returning here. This isn't hindsight. This is live. And so once again, you have to realize that these return bars, the price is probably going to cover that, come back, cover that bar, and then go. So just something I observed. Maybe you can see what you see on your platform. So you get a return bar, or you get a bar here, price returns. When it returns, that's when you can go long, once you get the buying indication over here. Because if the bid doesn't go below the lowest ask, it's not buying, it's still selling. So anyway, fellow traders, remember, don't be overly optimistic. Have some realistic expectations, and Make sure that you're not so positive that you wind up in disaster. And remember, it's not what you trade, it's how you trade it. Let's go drain the banks.